Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. This stream is exclusively in the Bookmap Discord TraderLab community. If you're visiting in YouTube, this is being posted after the fact, but if you want to see this in real time, use the link in the bottom of YouTube. There's no cost to become part of the TraderLab community. This is about the business of trading and about integrating Bookmap OrderFlow tools with auction market theory, using the volume profile as a chassis to overlay structured trades on. This is business, guys. And if you're visiting this stream for the first time, first of all, welcome. And I can assure you, you're going to get the straight oil from the can here. There's no holy grail. There's no secret sauce. There's no plug and play. And most of us, when we start the business, all do the same things. The question for you is it possible, if you don't have a statistical edge, that you're gambling? And if you're gambling, you are going to have winning trades, but you may not have a sustainable process. And this is borne out in the statistics of retail trader failure. Everybody has winning trades. The problem, of course, is sustainability and actually having a sustainable business. If that's your objective, and of course, one cannot say whether or not you will adapt, change what you need to do the work you need to do, only trade when you have an edge that favors you, in spite of the fact we all have take stops and have overhead and cost of production like any business, and you have to manage the psychology in order to be able to do all this. How do you put all those pieces together? I think, and many others do, that you might be able to get some of those answers in TraderLab. Now, we have a lot to talk about. Needless to say, this is the day after FOMC. It is now September 18th, 2025. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I got a couple important announcements, and we're going to roll right along, hopefully. And by the way, grab a pen and paper. We're going to talk a couple about things. Don't forget, post a photo of your trading pal with a photo of Bookmap in the background, your workstation. If you don't have Bookmap, you can go to bookmap.com. There's a free digital version you can download and fiddle with. Post this photo at hashtag BookmapPeps, Instagram, X, or LinkedIn. Also, today there's a special event taking place, and I'll tell you about that in a moment. If you haven't taken advantage of Bruce's pilot program, this is about developing an edge. And in TraderLab, we always talk about an edge. Now, there's many different ways and there's many different ways to determine and build out trades. But the idea of any trade, no matter whether you come up with it or you take the trades that I've shared in the TraderLab, you have to vet them. This might help you accomplish that, and you do have to register for it. One other thing, and off we'll go. There, right after this stream, and this is exclusively in the Bookmap Events channel. This is by a Axios futures trader, and it's the counterintuitive shape of trader development. So it really talks about a lot of things we talk about in TraderLab, which is unconscious competence and much more. If you haven't watched these, you can watch it live in the Bookmap Discord server, or you can see it later on YouTube when it is posted, as well as this stream. Now, let's get into today. Now, what's very important, and I want to show you something, and this comes from experience naturally, and it comes from understanding market mechanics. Now, remember, we are in the business of, quote, trading, and that means operating in randomness. We don't know what the market will do ever. What will it do? When will it do it? Who knows? So let's remove the prediction piece from trading. We can't predict anything. What we can do, when we recognize edges that we have vetted, we can then interact with the other participants. Also, because we can't predict anything, as this condition changes or develops during the trading day, we need to align with it. And that means a narrative. Let's look at what's right here. This is called a micro composite. Well, and this is volume profile. Now, when you guys use your candles, look at this candle. What does this tell you? Well, inside this candle are individual prices, which make up the candle, and there's different volume at each price. And volume really differentiates pricing. As an example, if a pint of ice cream is $10 a pint, there might be a desperado who pays $10, but do you think there's going to be a line out the door? There might be one buyer up there. Is that price equal to the retail price of, let's say, $5 a pint, where there's buyers and sellers willing to do business? They're not equal, are they? Well, as the market goes up and down, what happens is volume tapers off at the high, and at the bottom, volume tapers off. That's what creates rotation. Now, the thing about that is it happens in all time frames. So if you're trading a 2-minute, 5-minute, 30 seconds, 15, 60, it doesn't matter. It still rotates. And in that auction, and that's what this is, auction market theory, which is shopping. In that auction, this is how the market rotates. So you can slice and dice the market down into any time frame you want, subject to the range you want to trade. You use different time frames for different things. And we'll talk about that. Now, here's what I wanted to point out to you. This is our previous consolidation. No, and this is, you follow these streams, you'll know that we talked about this when this happened. The market was going up, and the market was going up. What happens? We take out weak longs right there. Now, and that was the only shot on goal. And then higher, higher, going to the moon. Other than here, the longs were not abused. What happens? Then we go lower. And this was an all-time high at the time. Gap lower and come down. Throw everybody who's long out. And what do we know about out here? This is the low. We didn't get there. What does that mean? This price is too low. Buyers. And what happens to the shorts in here? Sorry, Charlie. We'll send you a postcard. Squeeze. Squeeze. Now, what happens to the longs here? They get taken out. This is the retail price from this day. Now, I can't spend time here. I just want you to understand how the market might work. New all-time high. So what does it do when it takes these things out? Inventory grabs. What happens when it takes these guys out? Inventory grab. And then what was this? Flush the financial, you know what? Inventory grab. Now, this is why we don't know anything. So longs, the price there is too low. That's high volume. You used to be able to buy it there. Now you can't. Now we go up. Where's the stops on this side? Above here. We didn't get it, but we got to the high volume here. Then what do? Go down, take the inventory out. This was our target, high volume here. This is all auction based. And then we have an inside day. What do we do on the inside day, you ask? Inventory grab. Take out that low. Buyers. Now, what about these guys? Now, the other part of this is go down, take that out. Buy stops are above this high. Buy stops are above this, which is now the all-time high. Hasta la vista. Thanks for playing. We're having a great time. Love you. I'll send you a postcard. Outside day. Where's our stops? Now, right under there. So now we have, this is FOMC day. You know, this is where everybody jumps out a window, climbs back in, and then tries a few more jumps. Stops are here. Stops are here. Stops are here. Stops are there. Stops are there. No bueno. No stoppy. What happens here? Big inventory grab. Didn't take this out. And these were the levels that we were trading yesterday. And who knows? You know, this is part of the thrill. But now we get the shorts in the market. And what are the shorts? Fuel. You see, the market goes up to go down. The market goes down to go up. The market goes up to go down. And then the market goes down to go up. Who knew, right? Clean everybody out. Now the longs have been appropriately abused. The longs have been appropriately abused. That sets up the next leg. That sets up the next leg. And it's not a recommendation. It's just who knows, right? So this is market mechanics. You could learn this in TraderLab. Now, let's look at it from another angle. This is a market profile. And if you've watched yesterday's stream, you'll know that I was talking about this zone because this is not auction. This is a trend configuration. This is, I'm out of here. I'll catch you later. And then we balanced out up here. And that set this day up also for trading rotation. So this is all wonderful, having a great time. And then we gap, all right? And then we find excess up here, the all-time high. This is day before FOMC. And we get our sellers. So day before FOMC, it's not unreasonable to get people going, I'm out of here. I'll see you later. So now we were doing, it was shorts, shorts, shorts. And where's the stops? Under there. So there's the inventory. So on this day coming in, initially I was thinking about longs, but it set up shorts. So what do? You take shorts. And then we came down and then so once we got under here, there's stops. The next layer was here. Once you get under there, then you're going for this. Once you get under this, you put your helmet on and you're going for that. And then notice this reversal. Once you come back up in here and regain this, then, subject to how your plan is, you'd be done with the shorts. And then on the FOMC, we made this and we missed the all-time high by a couple ticks yesterday. So this is showing us excess and aggressive buying. Higher time frame came in here. So what do we anticipate today, you ask? That's a great question. We don't anticipate that. So let's go take a look. Now we're going to go to Bookmap. And so what do we know? Here's yesterday's high. The previous all-time high, which we missed yesterday, was right here. So let's just keep going with that. And then, got to find where I am. The previous ETH all-time high was here. And then today's ETH high is here. Lovely. Hold on a second, guys. I got to make a little adjustment here in Investor RT. So I take these high volume node, low volume node levels off. So these will disappear because right now they're showing you the current market. And we want to see what's what here. So we're going into RTH Open. I'm going to show you some structured trades. I found today a little more difficult than usual to trade. A lot of that has to do with velocity, volatility, range. So I got a little bumped around. I'll show you those. And by the way, this is just trading, So this is the overnight volume point of control. This is yesterday's RTH high. And this is the ETH right here. So what I'm looking at with this is, I know there's an outside edge here at the time. And I know this is the retail price. Think about, remember, high volume in the store. So I'm thinking, well, I got to get long somewhere initially. So I'm thinking about longs, but I don't have a location. So I'm just, what am I going to do here? Because of the context, I'm not, initially I wasn't thinking about shorts, but eventually I did take a short. So let me just try to show you what's what. So RTH Open, a lot of volatility. Not unusual given everything. This is called VPOC migration. Now, given the volatility, and this is the ETH volume point of control, if it's too high, there's a possibility that we're going to come down and check the one below. So the first thing I'm thinking about is if this is too high, here's the RTH Open, and I come back in yesterday's range, I can come down and check levels below. So I'm going, all right. And I see the VPOC migration, and this is just a plan. I'm not saying it's a good plan. It's just the plan I have. You do the best you can. And hold on one second here. I got to look at the market. All right. So I'm looking at this and I'm thinking, well, if I find too high, then I can come here, here, and this, and this. So initially, first of all, I'm looking for longs. Context is up. However, if I see the market is long. So the way you got to think about this, in the ETH, the market's long, right? We're outside of yesterday's range in the ETH, going to the moon. It's wonderful. But we're in this scenario, the market might need to rebalance. So there's two pieces, the ways to look at this. Longs only, somewhere, at locations, or you can trade a short for a potential retracement. And what I'm going to say is, when you have a trade plan, you're going to have flexibility, and then you're just going to do whatever. You're going to do whatever is whatever, and that's that. So, and the point of having a trade plan is not to be able to predict what the market will do, because we can't. It's an alignment thing. So this is called the variable high volume node. I start marking these things because what does it mean? Let's talk language. High volume is shopping, remember? And if we go for our pint of ice cream at $10 and it's too expensive at the time, remember, this is an active auction. It is trying to figure out what is going on. Is this too high? Well, if I start here and this is too low, now there's no volume at the RTH open, so it starts coming in. And now I use this to attempt to detect, and always attempt because it's always maybe, what's too high, what's too low. Well, too high, too low, so support, potential resistance, move lower, now resistance, so resistance. Now this is called microstructure, and I always have to remind everybody, this is not mechanical, and it is the last place anybody should trade. And I really have to stress that, because it's so easy to take stops. I trade this, but I also been doing this a long time, and I take more stops in this, okay? So if I take a couple of trades in this, I'll take a few. I can easily take a couple stops, and but I'm okay with it, because when the trade works, I get outsized opportunity. So it's really, but it's isolated. So this is a whole different thing. So most developing traders don't understand this, but you need to learn to read it and interpret. This is all about interpretation. So let's take a look. I get a sweep here, which says, well, if I can't regain this, then I'm going to go lower. So that's what I know. Now we come down here. You'll notice there's nothing here, right? You take this out. So now, I'm looking at this and I'm going, I'm not going to tell you what I'm saying, but I'm going to say, what's happening? I get a sweep here, and this kind of buy sweep suggests a counter rotation. So I'm just sitting here, and I'm a bit baffled by it, because, and what I want to clarify, when I say baffled, I'm saying it's not fitting my plan. So I don't have trades here. I'm just sort of sitting going, well, this is pretty wild. We still have big range and volatility. I don't pick the high or low, and I'm not a gambler. I'm very patient. So that's just me, Other traders are whirling dervishes, and if they have an edge with that, that's fine. That's what they're supposed to do. Not being a whirling dervish, but trading edge. So I have no opinion on what anybody else does. I just have to do what I do. So right here I have a sweep. So notice the sweep, the buyers, icebergs. This is in the book. So I'm looking at this, and it's right at the overnight mid. So I know the overnight mid has a possibility. Hold on. So I know this statistically has a probability. So my resistance is here. And again, I have nothing to do. I'm not doing anything. Okay? So nothing to do. I do have this liquidity who came in the book. So I watch the liquidity. Notice what happens. I now go into the liquidity. I have a sweep here, and I have this structure is now over here. So, and again, and this is a statistic. This is a high probability ish statistic. Let me give it to you. It's about a 68% probability. And, past performance not indicative of future results. So, and again, now I could sell this, and I'm going to tell you I did, because I'm in two-sided trade. Hold on one second here. I have alerts going off, so it's kind of a problem. Hold on. Okay, I'm back. So there's no short here for me, though it could be if you're prepared for it. I'm still in the what's happening mode. So, and I'm waiting. Now I come back in the yesterday's range. I took a short. Trying to remember where. Oh, it's here. So I got short over here on the break and the retest short for me. And this was my short. I did not get short up in here. I just wanted it. I wanted to see if we were going to pick down here, and this liquidity was in here. So I was looking at this to see if we mean reverted. Stop pick. And it didn't. It broke under here, so then I used that. Just saying. And then it was to come back inside, and I was going for this and this. So my scale was here, value area, and then and 70 is a key location. It's from the higher time frame. I'm going to show it to you in a second, and then this. So we got here, no clue, and then my trailing stop got taken out. So that was that. Let me show you where the 70 comes from, just so you understand some of this stuff. There. So what this is, if we look at this as, I'm not paying that. Oh, yeah, but it's on sale. If I come back to this retail price and it's too low, it's really a price check in the supermarket. No, up. So once this, and there's no clue, I was going for this, which is the same as that. The difference is this is only for this day, fair price, and we could still get there, you never know. And this is the fair price across these days. So this is multiple time frames. So on a higher time frame or intermediate, 70, and then in the daily time frame, just yesterday by itself, 63. So 63 was the target before. Remember? Might come there, might not. No, doesn't matter. Right? Hope you guys are getting something out of this. So now let's continue along. So this happened, right? So now I'm going, oh, you know what? And I get taken out of my runner. Okay. Now what? VPOC migration. So what do I know? New retail price. Right here. So I'm holding my short. I want to show you just how you read this. Now, when I say read it, it doesn't mean what the market will do. It's giving us information on the perception of valuation. Hold on one second here. Okay. We're at the mid currently and a low volume outside edge. So this is an area to observe if you're looking at the current market, just saying. One moment. Sorry about that. Got to take care of some business. So this is important. Right here, we have the sweep. And the idea here is that if that's too high, and this is the current retail price, we can either, right here, continue lower to this one, which was yesterday's RTH retail price, or since this is also a retail price in a higher time frame, and if you find this confusing, I understand. It is, unless you understand it, of course. Then the possibility is to go there to there, or this is too low, and then go there. And if we get above this, trouble in River City. And that's the last place. So too low, cross the Rubicon over here, and that's that. Okay? Trade over. So now it's, oh great, got to get long. Why? I found too low at the moment. So now I have this variable high volume node. Now what I know is potentially this is too low. So let's see what happens here. If this is too low, then I want to get out here at this outside edge. This is called mean reversion. So out here is where I now want to take a long if I can get a rotation outside to come back here and then to go north of the border. Right here, I was stalking along. I posted this in TraderLab and it ran away. Right there, it runs away and I go, I can't buy it. It's outside my risk parameter. So other than choice words, which is an emotional release, I had no way in. Now, I'm going to show you my next entry. So what I know here is at 95, right here, I have resting liquidity. And when I come up to 95, what I am trying to accomplish is what happens here. So I get the sweep. Notice what happens when you get sweeps. You often get counter rotation. Down here, we had a sweep. You get the counter rotation. Now, it's not mechanical. Here you get the sweep, down rotation. Here you get a sweep. Looking for the up rotation. Here I get a sweep, and that's where I was still short, looking for the down rotation, and instead it was, sorry, Charlie. So Tom got a ticket to the buffet. Got out of my runners. So now, again, this is where the long is out here, and no way in. So I have no trade until here. So now this is an order flow trigger, is what I call it. So this is my long. And I'm under the sweep, just so you know. And ultimately, going for this. And you'll notice, not so much. So, out again. By the way, out again. I'm scaling, I'm managing, I'm doing the rest of that, right? So now, where's the next structured trade in the TraderLab? It's out here. And this is how this works. Where's the outside edge? Right now, it's here. What else is here? Mid, VWAP, ETH mid, but this is the outside edge. So, and my liquidity shows up. So this is my location to attempt, underline, to get long. And this is called mean reversion. This is a primary trade in the TraderLab. What I always suggest, and again, this is up to the individual to take responsibility, for their plan and how they put their business together, is that for developing traders, learn one key behavior, and it's called mean reversion. And I always like to joke, underline the term mean because it's random. So the reversion trade is really a test of the retail price. Now, remember your shopping cart. Pint of ice cream is too high up here. I'm not paying that. What does it do? Well, where is it too low? This is why you get your rotations. And what's the retail price? This is the fair price. So if I get too high, I can rotate around. And now the market wants to figure out, really, where's too low? Where is it? I don't know. Well, so far, we found out that 70 is too low. All right, so that one's too low. So where's my next? And let's look at the structure. Too low, too high, too low, too high. Retail. There. Now, the retail price shifts up. What does it say? Let's look at the language. Too low, retail, and then too high is wherever, out there. So if I come out here, because I've rejected that, I can then be stalking along to come back here. That's called mean reversion. And we have structured trades in TraderLab for this. So the location for this trade is out here, low volume node. So it's out in an outside edge, and there's no precision. This is part of the pain of trading, is there's no predictability and no precision. So this is a long. I took a long, and my stop had to go out here. Actually, I didn't take it there. Hold on. It was against this. And, now here's something else I want to share with you guys. And I hope you're getting something out of this. I can't see your questions, by the way. One moment. Let me try to get the chat back. Okay. Ron Wood, were you in the Rolling Stones? Retail price is high volume. It's just like shopping. A retail price, if you think of this like shopping, like a store, is where the highest volume is. Buyers and sellers agree to do business. It's fair. When the price gets unfair, like it's on sale, if the shoppers, who are the traders, perceive this as too low because that's the retail price, they're going to buy it. Now, we don't know where too low is. It's part of the thrill, but that's a different element. But right here, this is a structured trade in the TraderLab. And now what do we know? We know there's the VWAP. We know there's the mid. We know there's stops at the mid and the VWAP. But this is what's important here. Outside edge. Oh, it's on sale. Now, the thing with an outside edge, there's no precision. It's an area. That's the whole issue with trading. It's not like draw a line on a chart and something's going to happen. It's draw a line on a chart and something might happen, in an area. So right here, this is where I got long. And, teeth chattering. Now, where's my stop, though? It is not there. Because, and I've shown this and discussed this in the TraderLab, because what's under here? Stops. Now, the concept is, if we come under here, these buyers, if they think this is a heck of a deal, because they're doing business out here, and I come under, then the possibility is those buyers are going to show up. So I don't put my stop with the rest of the retail traders. Been there, done that. And here's a little something for you to think about. It's called think like a retail trader. Don't act like one. So my stop is away from this. So I did not get stopped out. Teeth were chattering. In fact, when I saw this, I had the impulse to add, because I find, and this is just something incidental, that if the stops are here, and I get an inventory grab, it makes the long better, because now it's no different than the higher time frame I was showing you, how we come down, take out one side, and then go the other way. So VWAP to VPOC is a structured trade, but I don't put an order out. I need a trigger. So this is my trigger. And I don't, and there's two ways you can do this. If you can read it as it develops, you could be getting long here, or you get long on the retracement, and your stop's got to be away. So I just got away with it, I'm going to say. And here's the other thing. If I got stopped out, I would just put the trade back on again, after a few choice words. Now, what do we know? Too low, maybe. And I say maybe because I don't know. Do you know? Anyway, Ron Wood, I hope that answers your question. Trading is very much like shopping. So we can kind of make it simple, because it's really what's going on. What is the market doing? Why does it do this? It's trying to figure out what's a fair price. The high volume is a fair price, but it changes because it's an auction. In your store, the prices don't change much. And the only difference is time. So your product goes on sale. They leave it there for a week or 3 days, whatever it is, and then you put it back to retail. If the seller starts raising the price, some buyers are going to pay it. But at some point, if the price is too high, that it's going to shut off the buying. And then if we run out of buyers and you want to sell an S&P, you got to lower the price, you see, to get the buyers. So that's what creates rotation. So the store is the primary example. Wow, I'm just looking at my Bookmap here currently. So this is too low. Now this is too high. So if you're long here, the scale for me, and I posted this in Trade, I'm not saying it's a good idea, who knows, was this. So, after the teeth chatter over here, my scale was right there. And then I'm just hanging out, going for, and I post this in TraderLab. Where was it? IB high. Lost it. Don't know where it is. I think it's there. So, and then going for the IB high. And then what do we get? Let's look. Retail price. Break low. Support is here. Support is there. Come back. This is mean reversion right here. What happens here? Buy sweep. What does a buy sweep suggest? Counter rotation. Support. What does Tom need for his long? To get over this and to go north. And as it is in trading, as they say la guerre. So anyway, once it came under here, that was that. Now, once I get outside, I'm looking for another long. And that's it. And that's current. So at this point, either we're going to hold where these buyers were, or we're just going to keep coming down and then get back in the range. I have no idea. Not my business. But it looks like the buyers went to lunch at the moment. And if it doesn't clear 98.99, which is about where this outside edge right here, then potential to keep going. It's not a recommendation. It's just the way it is. And that's trading. So anyway, do you have questions? Let me take a look now. We're current. I'm going to put the levels back on. Hold on a second. I'm going to put IRT levels on so we can see what's going on. And let me get back to the chat. So how are you guys doing? Hanging in there? There are days that are very structured. And yesterday was a very structured day. And a lot of traders in TraderLab who can deal with the high volatility, which is not everybody, of course. And, your stomach does flip around because you're responding to fear, risk, normal. It's just the way it is. And if it gets outside your comfort level and your experience level, we're not here to gamble. We're here to take intelligent risk. And if you find you're in an environment that doesn't fit you, then there's nothing to do. You just sort of hang out, work on your crochet, narrate the market. Hold on. Pablo's asking me that I posted to watch out for the IBF. What I was saying, the IBF is a reversion trade from the top. I was saying at the time, don't forget this, we have a lot of mileage and rotations in here since I posted that this morning, that the IBF is a counter trend trade, and developing traders subject to their plan might not want to be fading this. They might want to stay in alignment with the context at the time. Context changes. So for me, the IBF is a short trade, but it's not my trade here. It's just a trade I don't think about in the context because the context is up and I held 70. Now, if I get under 70, I might do something different. And whatever it does, But I would not be shorting the IB high. In fact, on my long trade that I showed you, the reversion long trades, I was targeting the IB high to come back to it because there's stops up there. So I'm only in a long orientation. Other traders are going to be short because I trade a high time frame. I don't trade, I use the short time frames for triggers. I trade a higher structure. So if I get long out here, I'm going for that. That's me, and if the trade fails, it fails. It's fine, other than emotional response to it. So no, the IBF for me is a counter trend trade. But and so that's why I'm targeting it. Now it may never get there. We may be done, and this may all come back, fall apart, and go south. So I can't answer that one because I don't know. So I just trade structured trades. So for me, and I take stops. Today I took some stops, and it's just okay. Volatility. And here's the other thing about taking stops. If I'm trading reversion, I might take a long over here to rotate here to come out the top. If it doesn't get there and falls out, then I'm going to be looking outside at another area to come back to this. So, and it's still reversion. Now I know this is resistance right there. It's got to get over this to get to that. So this is my resistance now. Why? Because this is outside and this is high volume. If I can get over this one, then I can if I clear this, there's a lot of debris to get past, then I can come here. Now, if we stay in here and this volume point of control shifts lower, then this is too high. And then I'm going to have a problem getting there. So this has to get past that high volume right there to get to that. If it doesn't get past there, it can fall down and I'll take a stop. That's about it. It's not complicated. It's just random and annoying. This is still mean reversion. So I'm still on the longs. That's not a recommendation. I might be totally upside down, inside out. Happens to me, and I have to tell you, stops are just part of the thrill. Protect the account. It's not a right or wrong business. It's a statistical business. Hope that's making some sense. How you guys doing? Chirac, the overnight VPOC is not, for me, the over-under anymore. The 70 is really the key event that took place. So this is already not part of my thing. This current behavior is part of my thing. And since the market is now away, I took a long here. Not saying it's a good idea. Remember where my obstacle is. It's there. And where am I trying to go? Here. I don't call trades. Why would you want to take my stop? So now, working this. This is called mean reversion. This is the trade that I continuously point out for developing traders to learn. You're still going to have all the emotional response. Your teeth is going to chatter. You're going to take stops, but you need to understand market mechanics. This is a reversion trade. Now, the other part of this is, in TraderLab, you have to also know what is your probability if you get out here to get risk neutral. That's the first obstacle. So depending where you enter, you could go there or you just go in there. Doesn't matter. And if this thing can get the locomotion going, it does set up the possibility of coming up to 67.10 and the IB high and even the ETH high. That part, not my job, you see. So the trades I had on earlier where I was long, which are reversion trades, all I'm doing is trading the same condition from different locations. For me, nothing has changed other than getting taken out of my runners. So I'm not making this complicated. All I'm doing is getting repositioned for the same condition. It's just that the condition and the rotations are, look at this. Here to there, and then out the top. Too high? Hasta la vista. We'll send you a postcard, Tom. Outside stops. Now what? Outside edge. Potential there. And if I get through there, I got to clear this. If I clear this, then I'm back on this. And if I don't get through or even to this, then the trade will fail. And again, I get the coupon to the buffet and a few Happy Meals. You see, this is trading and it's random. So the only way I have found is to just recognize the condition, define it, wait for locations, manage my fear and my FOMO, accept what happens. This is a good long. Let me show it to you, by the way. This is okay too. I belong here. But you see this sweep? That tells me this is a good area. I also know I got stops, and what else do I know? I got this, and I have my icebergs. Remember, what's under here? The stops. I will not put my stop there. I can't. Let me tell you why. Write this down. Think like a retail trader. Don't act like one. Why would we put our stop there? Because we're risk adverse. We're not even conscious of it. You want the tightest stop you can get. I don't want to lose. Well, maybe you would lose because you put your stops, and that is where all the liquidity is going to be sitting. And if the market counter rotates, even though this is a sell sweep, which sets that up, you're going to get picked off. I call that a stop pick. The stop pick, for me, makes this a better long, and I have to be away from this. Does that make sense? So the stop pick, and remember the rationale. If you're a buyer and you perceive the market's a heck of a deal, your pint of ice cream's $3 here. If it comes down to $2.85, wouldn't you throw a couple more in the cart? See? And then what's this? Opposite. I'm not paying that. Sweep, that sets up the counter rotation. Took me out. All right. So what do I do next? I put it back on. Where am I going? Here. What do I know? Nothing. What am I doing? Trading the auction, following a plan, accepting the random outcome, and I am clueless. You don't know what's going to happen. You don't know, in my opinion. If you're focused on predicting, you're going to have a problem. If the casinos can't predict the winning hands and the losing hands, how can you predict winning trades? It's all the same. So if we can accept that we are a casino and we are the house, not the gamblers. Now, you might be a gambler and you are going to have winning hands, but you won't stay in business. If the casinos sat with the gamblers, they'd go out of business. Does that make sense? That's a proven business model. So you don't have to figure out really much. You have to understand the business you're in and solve for randomness, not solve for being right or predictability. I hope that makes sense. It's very different. Charlie the Tuner. Yeah, Ghost, I understand. What's too low for me? Well, Alex, I think I answered that. This is reversion trading, so this is the retail price. So this is where we're trying to go with this thing, Now, I will say I'm already scaled, and I'm hanging out. This is another target. And then this is the same trade. Remember, I'm just taking the same trades, and doesn't mean it's going to work. It, whatever it does, it does. And if I fall back, this, and there's another low volume node out here, but this is the primary distribution. Hold on, I got to filter something here a little bit. These, when you see LVNs there and HVNs, I adjust the sensitivity of the profile. So I only see the levels that are material. And because otherwise you could have levels all over the place that are not material. Like this low volume node, it is a low volume node, but what's material is this one because it's outside. This is further inside. And then the one that's also material is going to be out in here, or the IB. So if I can cross this and clear, I got to put this back here. That high volume, then I can go on to the next level. If I can't get above it, I'm just going to thrash in here, and either it's going to take me out, and I have to live with that. So this is where I'm trying to go. and then I got to clear this, and then that's my target, not a recommendation. So I just have my it's all laid out. I have nothing more to do. I just sit here and I'm as clueless as everybody else. I'm not ignorant, but what I'm clueless about is the randomness. A tweet can come out and this thing can do the Acapulco cliff dive. And if it does, I get taken out. And I go, huh, that's interesting. Because that's all I can do about it. I can't do anything else. Ask anybody who's been trading for a while. I've been trading for a while. And in spite of it all, as much as I'm emotionally attached and kind of cheer for the home team, like, come on, come on, come on. You talk to the trade, I do. But I just accept it. And then the only way I measure myself in this, P&L is not the measurement. Adhering to a plan with an edge is the measurement. I have losing days, and I have them. Either I've made errors, which I try not to do, but I'm human and occasionally they creep in, and or the market behavior and my plan are not in alignment. And when that happens, I'm going to be zigging, the market's going to zag, and then I take stops because what my structured trades fail, and they are going to fail. I'm all right with that. I have to be because I've chosen to be in the business of randomness. So then it's statistical probabilities, and it's almost like buying a lottery ticket. So your stops are the price of entry. That's really it. I buy the ticket to ride, and then, it does whatever it's going to do. So what do I know? This is what I know. I don't know if it's going to go there. I do understand how the market works. So if I understand market mechanics and it's random, then I know I might go there. And then I take another scale. And it's not at the price, it's ahead of it. And then if we have sellers in the market, where are their stops? Up here. That's why this is the next target, not a recommendation. It just is what it is. And there's resting liquidity back at 10, which was an important level on the way up. And there's liquidity sitting back at 15, right above the IB high. You could be looking at this thing and look at 10. You could, and again, let me see if I can show you. Yeah, here. See this? Let me go back here. I want to show you some ideas. I can. This. Let's look at this. Now, this is order flow phenomena, and these are separate elements you can learn. I believe this is where, it was 95 down here, order flow phenomena. That was a long for me. And this 10 was an ad for me, neither here nor there. Outside, let's go back to it. Sweep, microstructure. This is a little bit more advanced concept. Support, sweep, north. Okay. So this is a scale. And then I'm still going, I'm going up for the ETH high was the idea. And then 10. So 10, I get my sweep. So I have sweep, microstructure. Let me show you this. Now, if you watch my previous streams, I cover a lot of this stuff. Today, really, we're talking about mean reversion because that is the primary behavior of the market. If you come to TraderLab and you learn reversion trading, the market's always reverting. And really, what a reversion really is, it's a test of high volume. Let's go back to your store. If it's the corner store, it's the same. Let me show you the store. I always talk about drawing on the chart because you need to understand what you're looking at. It isn't just the noise, which there is. Let's talk about this. Sellers are here. There's the iceberg. No clue. Buyers are here. You see the expansion of the range. We counter rotate. Where were my buyers? There, and no clue. And we come down. So sellers are there, and I don't know. There's absorption here. There's the buyers. There's 97, 100 sell stops coming out. Thanks for playing. They get a coupon to the buffet. And then where's my sellers? Weren't they there? So, and then I have my buyers who absorb this delta. I know it's kind of noisy for you because I'm looking at different stuff here, but see the selling? This is delta. Now, what is delta? Delta is market orders, aggressors. Are there shorts entering here, or is it just a rotation taking sell stops out? See, that's always the question. So when you see a red bubble or delta, that doesn't mean it's going lower. It means there's sellers. That's all it tells you. Then it's what happens to those sellers. Here's what happens to them, buyers. And I got my liquidity here, and I got my 10 hanging out up here. So what I'm doing is I'm going, well, here, target. So these are trades. Now this is more advanced, but these are trades, if you vet them, that are doable. There's your sweep. What happens when we see the sweep? And where's my support? That's along to there. Scale, and then target. That was the idea. Support, see it? This is all structured trading. Now, don't think that you can just come into TraderLab, draw a box, and be able to trade this. It doesn't work that way. The primary input's the condition of the market, which is long. So if we want to only think about longs, so this right here, so this was, let's just say, here to there, teeth chatter, stop under here, so scale here, teeth chatter, hold this, hold that, north, clear this, add, okay? And this is not anything more. And what's this? Next target. Then this. And I was at this point, and I'm going for this, okay? So you know. So on the last one, I got taken out of it. Just, you know, I saw this and I went, uh-oh, there's the sweep, there's the obstacle, there's a sell trigger. But what else do I know? My buyers are here. So, you know, give back 7 points in this volatility, life in the fast lane. Done with that. Now, sit here, teeth chatter. And this is where I took right here. So VPOC migration. So now I'm looking for mean reversion. Well, my outside edge, let's look at this before it gets there. I know I have, what do I know? I have this. I have this outside edge. And I know I have stops under here and all this. So this is my area to be looking at, and there's my resting liquidity. And out here is where my buyers were aggressive. So I start looking out here. Out here. Here. And I'm trading mean reversion, right? Took a stop. Okay. It didn't get here. VPOC migration. Too high. I took a stop. Anybody ever tell you they took a stop? Took a stop. Say Laguerre. Next. My next trade, once this, and here's another piece. You see this sweep? So this is what I'm leaning on, and I'm trying to go there. So this shifts down. I know now that for this trade to work, I've got to clear this and not get under it because I'm going there. And it didn't, you know, and and then it rolls down and I get this. So I get taken out of it. And now I get another sweep, and I'm looking at this, and I'm saying, okay, let's look at this. But I have VWAP and mid, and what do I know? There's stops down there. All right. And that's where, so I took a long there. After the pick, remember the pick. And then it's the same trade. I'm just doing it from a different location to come there. Okay. So that one, and then VPOC migration. What do I have to do? I got to clear the variable high volume node. There it is. No bueno. What happens? Scaled. The rest get taken out. Going, you so-and-so's, right? And now what's my last trade? Not a recommendation, this. That's what I said. Excuse me a moment. Don't want to telegraph trades, but scaled. And then this is the next area. And then same trade. And it's not a recommendation. I'm clueless. And we're current. Is everybody with me? Hope you're getting something out of this. You might find this like, what is he talking about? All I'm doing is very simple. It's very simple. It's just random. Pablo, as far as, hold on, what does it say here? Hey, Tom, sorry, can you refund? Guzman, microstructure, that, I don't know what you're asking me, how deep into microstructure. It's their areas. So I'm watching the order flow. Look at this, 400 stops come out. And what's under the mid? Stops. Now, a sweep would be nice, but what am I using? This. Because now I'm trading the reversion. Outside in. Now, the trick with reversion is the outside. It's not firm. It's a area. Remember, trading is areas. Now, let's assume, we don't know. Just because I got long, it's as good a guess, and it's a guess. But it's what we call educated guess. So, in fact, where did I get in this thing? Hold on. Since I'm still sitting in it. I got into this before. So I think I got into it here. Yeah, I got into it here, and then it made a new low. That's the stop pick. I can't have my stop there, right? Same concept. In fact, my stop was under here, and it missed me like, unbelievable, one tick. And then there it is. Now, again, I have to say to you, if I got stopped out, I'd be putting the trade on again. I already know that because and let's look again at the microstructure since you asked. And guys, there's nothing that says you're not going to take stops. We all take them. But for me, so I was under here, you see. So when I got long, where was it? Maybe here, and then I'm not putting my stop there or here, but I did look at this and I don't put it there. I'm under it because what I'm thinking is this is here for a reason. If we counter rotate, and don't forget, we came up to the VWAP, what might we get? VWAP sellers. That's mechanical retail traders. That's what they do. And they win too. They might be right. So that's the shorts. Now, I assume, right? But I know the buyers were there and these guys are hanging out. Well, I'm not going to put it there. I got to be under this. And now what happens here? Buyers. So the stops you see here are these guys. The stops here are those guys. Don't do it unless you have an edge doing it. And over time, it saves you enough ticks. Even though you get taken out of the trade, that might work. Over time, if that's a profitable process, then that's what you're supposed to do. For me, it's not. Look at this. Where'd it come? Let's look again at structure. What do I know here? There's my buyers. Now, my buyers were there. How do I know it's just not going to keep going? I can't. What I know is that is a problem. There's my sellers. There's my buyers. And now where was it too low? I'm going to show you that microstructure you guys are asking me about. And I don't know any of this. I only know maybe it'll do this, maybe it'll do that, maybe it won't do any of the above. Clueless. Come And where's the micro volume? Right here. So there's your interaction with the liquidity. There's your icebergs. There's 60 sell stops coming out. Thanks for playing. They get a coupon to the buffet. Where were the sellers last? They were here. This buyer here was absorbed. There's the iceberg. So the sellers are there. The buyers are here. Now I'm taking you down into the subatomic level. But this is how I read it. This is when you guys talk about multiple time frames, and all that kind of stuff, right? That's what this is. Except this isn't based on time. This is based on behavior. So the auction is not, gee, 5 minutes has to go by. Let me look at my watch. Oh, I got a 5-minute something or other. And unless that works for you, of course. For me, I don't use time and I don't use indicators. I use structure because I can understand, and you can learn to understand what happened here. What's different here than there? The sellers are there. The buyers are here. The sellers here, which are the sell stops, were absorbed. So if I see absorption, and I know here there was absorption, but now they're underwater, what might happen to everybody who's short from the VWAP? What's up here? Buy stops. They become the buyers. You see? So let's watch. And where does it come? Where were my buyers? Weren't they there? This is a long. This is a long. Now, I got long, Now, when you look at this, you go, gee, I like that better. But, that's life. What are you going to do? Where are we anyway? So anyway, that's the long. And that was the microstructure. And VPOC migration. And I'm still long and clueless. And where am I trying to go? I have to be aware of the 10 again. Remember, the 10 was important. And I have this. Liquidity's coming in here. So this is an important area for me, for my long, and then it doesn't matter after that for me. What I do know is the possibility is stops are sitting here. So let's watch it. Are you guys tracking? Is this useful? Anyway, Duzman, I hope I answered that for you. Yeah, Fred, we all, if we have good trade location, we really need to understand that we are going to give back. In other words, it's just part of the business. We're gonna be sitting up whatever X amount of MFE, and now the lunatic is fearful of giving it back. So we start moving our stops up. What I found, and we all have done it, so it's normal behavior. The thing we have to learn as developing business-oriented traders is to understand the randomness and to look at statistics or probabilities over a large sample size. We are always attached to the individual event. I know right here, I got to be going, what am I going to do here? How about I already know? Right here, what are the possibilities? Let's talk about what might happen. Remember, the best you have is maybe. This is important. 70% of the volume today so far, this is the outside edge. That's an outside edge. I might just come out here and then come all and rotate back and do this thing again. So I have choice before the fact. I can have my limit order here and just be done with it, or I can be looking at this and thinking to myself, there's stops here. Stops are fuel. What does the market tend to do in all fractals and time frames? Fuel. What's sitting at the VWAP? Fuel. Where's the counter rotate? See how it works? Fuel to there. Fuel now is here. Retail price. Now, what's too high? Lovely. Let's come back to 10. It is material. Look at the 10. See? A very material price. So if I'm going to scale, and I'm not going to discuss what I'm going to do, I might be thinking about the 10. And if the buyers can get through the 10, then I got this. That's it. No more complicated. And then maybe the ETH high or not. It's just not that material. And what happened at 10? We got to come back. Besides the sellers, what else is at 10? It's a swing. It's out here is where it was too high. So there's going to be stops. So hold on. So that's it. It's just hang out, work on your crochet, and be apprehensive, because that's our emotional wiring, but be disciplined. The idea of the trade plan, and this is for everybody, is to know what you'll do. You don't know what the market's going to do. I don't know what's going to happen here. Are these guys going to pull? I'm seeing selling icebergs. And do the buyers now, since we got, don't forget, what are we going up on? The shorts. And what did we go down on? The longs. Now we're going up on the shorts. And what might happen? Go down on the longs. That's what creates your rotations. So now I'm looking at this. What's sitting above here? Isn't it stops? Now, if these guys want to sell, they are going to be selling into the stops, same as us. And if you're in TraderLab, you want to buy into the stops, but we don't know, that's the, the issue. But if you build out structured trades, that's a long there. And it's hard to wait for these, because when you see this, you think it's FOMO. Oh my God, And then if you get these sellers, now there's the sellers, and they're just icebergs. So now we want to watch, okay? Not a recommendation. Let's just see what it does. This is the TraderLab. Now, I don't know if this is of interest to you. This is what I trade for, because, that's it. I take stops. I'm not trading for 3 points if I'm risking 3. I got to get paid. And the only way I get paid over a random distribution of outcomes, a large sample, is trading this stuff. Because now that makes up for a bunch of stops, don't you think? I mean, does that make sense? So let's watch the behavior. You see the sellers? The thing we have to figure out is, these guys here who are selling right now, are the buyers able to consume them? And what happens here? And this is a strike price, so, okay. But what else do I know? Let's talk about what we know. Stops are here. And again, it never has to get there. I'm getting my sweep. My teeth are starting to chatter. So now I'm paying attention. And these are not trade recommendations. It's just maybe. VPOC migration potential, which is supportive. So you want to see the behavior now. VPOC migration is another part of the auction process. That's the yellow line. If we can get more volume up here, that is saying what's below us might be too low. You notice I always say maybe. I'll never say it is. I'll say it might. Because you got to, even the self-talk is really important here. If I say it's going to do this, it has nothing to do with it. If I say it might, here's what might happen. Right here, it can come back here. I mean, the whole thing can fall apart. Or we might counter-rotate and then take it on and get through. Or it's over. Isn't that all possible? So this is important. And where's too low? Isn't it out here and out here? Speaking of. That's a lot of MFE to get back if we can't get through all this, don't you think? So let's watch. Very, very key here now. Watch the liquidity. Watch the icebergs. You want to see now if these guys can eat. It's like Pac-Man. So we'll look over here, and you see they took it. Now the next layer is going to be up here, and there's the IB high. And, after that, it is what it is. So let's watch the behavior. This is a structured trade. You can learn this in TraderLab, right? You guys in TraderLab, are you on the long mean reversion? If you're trading anything else and it's not vetted, you're gambling. So cut it out if you want to stay in the business. I mean that with all sincerity and sympathy, because we're all crazy. Okay, we want to watch this here. Very important right here. You can see the icebergs, and you saw the buyers went into that liquidity, and they are being absorbed. So now we have to see who wins right here. And it's not a recommendation you do anything. It's a recommendation you observe the behavior. Look at the high volume right at that developing value area high, the purple box. So this is what you need to be thinking about. You can anticipate behavior. You can't predict it. So here, if I can't get above here, I get my rotation. If I can clear this, then I can go here. So that's as complicated as this is. And again, the part that's complicated is randomness, not understanding what might happen, because we can't know what will happen. Does that make sense? And by the way, guys, if you're watching this later in YouTube, there's a link down there. If you want to visit the TraderLab community, you can learn this. Is everybody tracking? Can you guys see why you could use order flow and anticipate behavior? It's not predictive. We anticipate who participate. So if I know this, I then have choices. I can choose to sit through a counter rotation and give my MFE back. I can exit or whatever, right? So you have to find these, you have to isolate these behaviors, screenshot it. Now, here's the thing. We have our sellers. They were absorbed. Okay. Now, what happens? Where were my buyers? Weren't they there? And here, where stops? Here and here and here. Do my buyers come for it? Because there's absorption. The 114 sell stops that came out were right there. Well, isn't that what retail traders do? Right? So now this is gone. The sell, unless something jumps in front of it. This is an inventory grab in a microstructure. There's the absorption. There's the stop, so you can kind of see. And now, if I can get above here, next target or not. Is this logical? How are we doing in YouTube? So now, where were our sellers? You see there's more sellers sitting here. So this is important now. So subject to your plan, you could be out of this thing. You could be back here. You see, all these things are, what do I do? Your fear is going to have you do one thing, but your plan is the guide. We can't make it up here. We have to go, well, if I get, if I see absorption, it doesn't go, boom, I'm out. And then you give up this. Or you're out, and this is the high of the move, and it comes all the way down and would have stopped you out. Which is the right answer? Hindsight will tell you the right answer. We don't operate in hindsight. The lunatic, Hyde, operates in hindsight. You should have got out here if it's the high. If you got out here, you should have stayed in. Look what you gave up. Does that sound familiar? I call that the lunatic, Hyde, Jekyll and Hyde. You got to learn about Hyde. Hyde is the lunatic under the hood. Fight and flight, all that, all the primal wiring. And it's always in play. And it's very critical in hindsight. You shoulda. How many times do you say to yourself, you shoulda? Well, we all do. But here's the thing about shoulda. You should have followed your plan. If you don't have a plan, then you can't follow it, right? You don't know what to do. You don't know what the market's going to do. So in my primer webinar, which has about, 34,000 views, I talk about anchored inputs. I'm going to show this thing to you if I can. try showing you this is what the TraderLab looks like. It's a community of like-minded traders who come together to leverage their collective experience. It's about the business. See the behavior? And there's a lot going on. The most important thing is it doesn't matter how long you've been trading. What matters is if you want to be in the business, that you maybe start differentiating your behavior from other retail traders. Understand why they don't sustain themselves in the business. And the first place to look is at yourself. Why aren't you a consistent, profitable trader? Now, I'm not saying winning trades. We all have it. Remember, gamblers have winning hands. What does that do? Casinos are building larger casinos. Must be a reason for that. So, and they do pay to gamblers. So that's why I take a stop as much as I don't like paying any bill. I have a moth I keep in my wallet, the guard moth. You guys heard of guard dogs? I don't like paying anything. That's emotional. But how about in business, there's overhead and cost of production. If I have an edge, now this is important. This says too low. I clear here. Where's my next location? It's there. That's the plan, right? Now, do I know if we're going to clear this? Nope. Does that make sense? So we all have winning trades, but most of us don't succeed, don't stay in the business. So we have to understand our fear, our emotional triggers, and we have to make a decision about what's going to be driving the bus here, you or your emotions. Emotions are primal wire. They're part of us. They're wired in, no control. I spent years, and I say years, with willpower. I can do this. And willpower. I'm not going to bail out. I'm not going to move my stop. Willpower goes right out the window when you're in, because what's happening is chemicals, and I didn't understand this. Chemicals are released in your brain, the fight and flight mechanism, and then all this stuff. It's primal wiring. You don't control it. So in spite of intention, and I know we've all done it, right? You too. I'm not, I'm going to take the next trade. And you don't. Or the next trade, instead of doing what you think you should do, you trail the stop up real tight and you get taken out. You didn't do it on the last trade because it wasn't in your plan, but this time you're not going to lose. Mentally, you're in the last trade. You're not in this unique event right here. See the behavior right here. Why? See the sellers? So what do we know? The sellers that were here are still here. That's resistance, you see. So now what has to happen? If the retail price is here, then the idea is if this is too low and we stay above it and we got to clear this, then that. If not, then what? Then rotation. That's what I know. I'm sticking to it. I'm not predicting. What I'm saying is if this is too high, then that. If I come down even to here or wherever I come and I hold it, then what? Then back here. If I fall out here, then it's, the longs. Remember what the market does. Market goes up to go down, right? And this, by the way, back here, there's a library of webinars. Thanks, Ned, for narrating. Sorry. Taking care of this for us. And the Holy Grail of trading. How close can you get? Meet the TraderLab. Very important. And this is the primer webinar. What is the basis of all this? Day trading, fantasy or reality? Stop gambling, start winning. Watch that one. And day trading, why most traders using indicators fail. And then there's a document section. And this is not about me. This is about you. This is really about all of you. This is a collective environment. We're leveraging the experience of the traders in TraderLab. Doesn't matter how long you've been trading. Everybody brings something and we throw it in the pot. And then it's a matter of statistical probabilities, data mining, structured trades that I've shared, other trades you can develop, but understanding the mechanism of how to find out if that trade actually has any edge that favors you and you're not just gambling. Wouldn't you like to skip the gambling and maybe just participate in trades that you understand and that you've reverse engineered so you can develop confidence and manage the lunatic? This is all available and a lot more. And the Bookmap community and the TraderLab, of course. So I hope you find this useful. Please give a like if you're visiting YouTube later and come to TraderLab. See why this is material? Do I know it's going to do that? No. Do I know why I might pay attention to this and what it means when I'm seeing the icebergs, which is what an order flow tool can do for you? When you have a high tier order flow tool, this is edge. Look at that. Look at this. So then where might it go? Here and where else? I got support here, too low. Here, too low. It can come out anywhere. It could come anywhere. And where was my last sweep? All the way down here. Buyers are here. Buyers are here. Break high. Where were my sellers? There. Those are my buyers. There's my leg. Now what? Buyers are here. Buyers are there. Buyers are there. Where's my stops now? Under here. Where's my stops? Under here. Under here. Where's my stops above? Up there. Now let's watch the behavior together. I've only got a couple of minutes left. I want to remind you there is a webinar going to be starting right after this one. You can use the link. It's actually, if you're in the Bookmap server and in the TraderLab, you can access that in the special events area. And you might find it interesting, or you can watch it later as well as watch this one. If you guys on YouTube are watching this, if you find it interesting, there is no Holy Grail. Been there, look for that. You know, I think they're still looking for the Holy Grail. If you want to learn how the market works, why it does what it does, and also how to determine and extract an edge and then build out a business plan to operate in this environment, you're all welcome to TraderLab. There's no cost for it either. It's open to everyone. And you don't have to be a Bookmap subscriber. You won't be harassed or otherwise abused. I think the market can take care of that for us as far as abuse. But most of the abuse in the market is really from ourselves. We abuse ourselves because we're gambling. And we can't expect sustainability if we're gambling. If you go to the casino and you gamble, be sure to get the cocktails and the ticket to the buffet. It's entertainment. If this is a hobby for you and it's entertainment, and you're getting a dopamine fix and the rest of it, that's not sustainable. Sorry. But if you're interested in the business, you're going to have to roll your sleeves up. And the other part is change what you believe this business is. Because we all believe we have a fantasy of this business because we don't know. In fact, I asked in the TraderLab, and I'm still waiting for some of you to still do it, if you could go back in a time machine and counsel your newbie self based on what you've learned and what you know, whether TraderLab or elsewhere, what would you say to that trader? Please post it in the TraderLab so all of us can see how much we have in common, because we're all the same. Anyway, don't forget to like, and if you're in YouTube, come to TraderLab, use the link down there. Appreciate you guys stopping by today. Hope you got something out of this, and I appreciate every one of you who participate to make the TraderLab what it is. It's a unique community, and there's no cost for it, but the key is the traders. If you want to be a trader and be in a community of serious traders who are interested in the business of trading, use that link, join the TraderLab. I think you'll find it a very important place to visit on your journey. Thanks again, and I look forward to seeing you guys tomorrow. Have a super day, and remember, if you don't have a plan, it might not be realistic to anticipate or expect sustainability.